So I want to officially welcome you to JDC West 2021 International Business Case Presentation sponsored by RBC. A huge thank you goes out to our judges, Genevieve Pajot, Senior Manager, Sales and Marketing at Pollard Banknote, Herb Zobel, Vice President, Commercial Financial Services at RBC, Hayden Zamet, Manager of New Business Initiatives at Skip the Dishes, and Randy Baldwin, President of Acorn Hill Partners. Competitors, you will have a maximum of 20 minutes to present. Immediately following the presentation, judges will have a total of 5 minutes to ask the presenters questions. I am our academic moderator who will be timekeeping and controlling the overall flow of the presentation format. Time intervals will be noted in the Zoom chat by myself, beginning at the 10-minute mark. Following the presentation, I will facilitate the question and answer period. Judges will indicate their intent to ask a question using the raise hand function, which I will call on them to indicate the next question. No questions or comments will be permitted from the audience at any time. The audience is also prohibited from communicating to the presenters in any forum, including Zoom or via other mediums during the presentation or questions. If you are an observer, please ensure your camera is off and the microphone is muted. Once the questions period has completed, the Zoom meeting will end. And competitors, you are free to begin when you're ready.
Good morning, Ms. Krakowski. Thank you for having us here today. We know that ColorSpace, your company, is really looking to expand internationally as you already are in about 8 different countries across the world. We know your company has a lot of potential to continue to grow and even continue to expand even further to frame your company for future success. And so our mandate for today as Slim Consulting is to aid ColorSpace by selecting the best international expansion strategy for your company. And this was discovered through defining what the key issue was with your company, which is deciding which international country and or company has the best cultural and financial fit. We know it's extremely important that ColorSpace is able to kind of combine their culture and your Kaizen procedures with another company internationally, as well as be able to financially have this be feasible for your company. So looking a little bit deeper into the cultural and financial fit, there are 3 countries that us as Slim Consulting considered for your company to move into and expand into, and they were Colombia, India, and Saudi Arabia. And we know that all of these countries have great potential for your future because they're in places where you aren't geographically. We know that you aren't in the Middle East, and as well as you are not in South America. You've done a great job at diversifying yourself geographically, but we want to help you expand into those other areas. So looking at what your company is currently doing right and how you can meld that with other company cultures, we know that your foundation and your base is based on Kaizen and that strong culture for continuous improvement. You have your Learning Institute of ColorSpace, which is a really great CSR initiative that your company has implemented. We know that a level up is that you're extremely internationally diversified already. So being able to have that global presence already gives you, puts you one step higher on wanting other companies to want to partner with you. And we know that the automation of your technology and being able to kind of move into that innovative world is really something that your company is excelling in. Looking at some decision criteria that we are going to base our recommendation off of today is first off, cultural risk. We know that this is one of the most important factors to consider for your company, as the ability for cultures to work together, which can be measured through the company culture impact, is extremely important, as a lot of companies do fail if they're doing a joint venture and acquisition with a company that just the 2 companies cannot meld together and figure out how to work together. The next is financial considerations. Is your company able to do a joint venture with another company? Is it feasible? Are you going to have a lot of growth? Are you going to see a lot of company growth from this? So the cost of expansion is how we're going to measure this for you later today. Technology is also very important, as your company has a lot of automation that you're doing with your technology. And so is there potential for automation of technology in other countries? Can you work with the technology that companies have in other countries to kind of help your company grow? The last thing we're going to look at is obviously the COVID-19 pandemic that we're all in today. And if you had an effective reaction and prevention of the pandemic in those other countries, and obviously those are the countries we want you to move into to be able to operate business a little more effectively during the pandemic. So looking at a cultural analysis of all 4 of the companies, so Canada being where you are situated, as well as the 3 potentials to move into, this is specifically going to target Canada and Colombia. If you look at the individualism and the uncertainty avoidance categories, these are 2 categories extremely important for Canadian companies, as individualism in Canada, it's a very highly individualistic society. And it's important that the country that you're going to work with also feels that way. And Colombia, unfortunately, is just very on the opposite end of the spectrum as you. They're highly collective. And we also, as Slim Consulting, see that uncertainty avoidance is very important. So Canada having a weak uncertainty avoidance is very different from the strong uncertainty avoidance that is seen in Colombia. So due to these high cultural differences, this is going to lead to a lot of inefficiencies that aren't going to work for your company to be able to expand into Colombia. So just looking at some of the other decision criteria we stated at the top here, you can see that in a lot of other categories, Colombia just isn't feasible, as they are not doing very well with this COVID-19 pandemic. Their numbers are very high, and so doing business there just isn't going to be feasible in the near future. And they aren't very technologically advanced as the other countries that we're looking into. So due to that, Colombia is not going to be a good fit for your company.
So looking at Saudi Arabia in comparison to Canada overall, in terms of communication, which is one of the key aspects that we did want to look at, Canada has a low context in terms of that communication. Time is money in Canada, and everything is contractual. Everything wants to be solidified. We want everything. You want everything handwritten, and you want contracts to be formed. That way, when there's anything that happens, there's a precedent to go back to and something to refer that contract back to. And in Saudi Arabia, this is highly contextual. Things are done more so on a handshake deal rather than contractual. It's seen as a negative there in Saudi Arabia. So this really shifts the dynamic between Canada and Saudi Arabia. And in terms of that cultural analysis of bringing in Saudi Arabia as a potential expansion spot, this aspect really shows that Saudi Arabia does not align with Color Space's current culture, and that cultural risk and the impact on the organization could be detrimental. And looking at the trusting aspect, in Canada, things are very task-based. There's trust built through business and skills. And once again, in Saudi Arabia, things are built through that relationship aspect and that handshake deal. So that also has a large impact on the cultural aspect of Color Space overall as a company. So we're taking out Saudi Arabia as one of the current options for a financial expansion. And as I mentioned throughout, that cultural risk is one of the key things that Color Space looks at in terms of a new expansion, and Saudi Arabia does not align with Cultural Space. In terms of technology, Saudi Arabia is currently doing quite well in terms of technology and applying new innovative technologies into their operations and manufacturing, which is a benefit. And that COVID-19 pandemic does not have any shifts in terms of an outlier or a huge decision maker. It really comes down to that cultural risk at Saudi Arabia, and that's why we've decided to take out Saudi Arabia as an expansion option for you, Color Space, today. So looking at the possible expansion strategy analysis, we've broken it down into the ease of entry and difficult to enter, and then we've also broken it down into culturally distant and culturally close. So looking at India, which was the last option left, there's barriers to entry. Currently, because of the current barriers to entry is currently that time zone initiative and that physical distance that I'm gonna lay out a little later on. And then in terms of that government policies, India does have some policies in place where you cannot go in and do any acquisition, which really takes away from Color Space's expansion project. And looking at that in the overall chart, we can see that it is quite difficult to enter India overall as a market, but looking at that cultural distance, they have a great fit. Well, they have a semi-perfect fit with Canada, although they're not identically similar, but there's some common practices that do align with Canada. And one of them that I'd like to highlight is that uncertainty avoidance, because uncertainty avoidance shows that the employees and the people who work there are willing to take that extra step in finding key things that are going wrong. And as you, Color Space, try to bring in that initiative of changing one thing every day or improving one thing every day, that aspect is really going to help you in India with their current labor force. So the result of this is that they're culturally distant, but they do align quite well with Canada overall. And our suggestion for you, Color Space, today is to do a joint venture in India. And moving on to the value proposition of the expansion in India and why we believe India is the best place to go is that they have a great low operating cost. So that's really going to help your top line revenue in terms of that, looking at that margin and that cost of goods sold when you're operating and manufacturing your products. And they have a skilled labor force, which is really going to add that benefit to Color Space and that Kaizen initiative that you guys bring with you on all your expansion project. And that strong post economic growth that India is going to have is definitely going to solidify you and allow you to reach other suppliers. And the ease of doing business, as I mentioned before, they have moved from 104 to 67 spots in the overall ease of doing business, making them a great place to do business. And adding on that large population just benefits you in terms of that low operating cost and the wages that you can pay.
Thank you, Sullivan. So now let's talk about how we're going to accomplish this joint venture in India. So we've actually gone out and found a partner for Color Space, Axo Nobel India Limited, also known as Deluxe. And the goal here is to become the market leader in India in your industry by having this joint venture with Axo. So basically, we want to set up a long-term joint venture to effectively penetrate the Indian market and successfully expand into the Indian market to, like I said, increase that global market share, which we think will drive success for your company in the future. But now I want to walk you through our implementation plan, because now we know what Color Space is going to do. So now I'm going to walk you through how we're going to do it. And you might think a 1 year long expansion plan is long, but let's remember the cultural differences between Canada and India. In India, it is important to establish trust and relationships. So this is why we've allowed 6 months, for example, for the first phase of building that contract to ensure that the relationships can be built. And just to reiterate why India, just because it is hard to do and it's going to be difficult to enter, does not mean that your company should not be doing it. And I'm going to walk you through exactly how you're successfully going to expand into the Indian market. Now let's talk about phase one, building the contract. So this is obviously very important for any partnership communication. So we recommend that you finance the expansion through strategic debt for the most part, as well as selling that paint chip printer in your Winnipeg operations for further financing. So as you can see, overall, the expansion cost will be around $250,000 minus the sale of the printer, which we've calculated to be around $20,000. We recommend that you bring in an EDC, strategic relationship manager, and we've actually gone out and found someone for you, Mr. Miner. And basically, EDC will just be in charge of risk sharing for your company. So in case something goes wrong in the expansion and in the expansion plan, you're taken care of on the back end. Again, it is very important to emphasize collaboration, as we recommend this joint venture be 50-50, as Axo is currently already present in the Indian market. It is, however, important to establish contract jurisdiction in case there's any legalities that arise. So we recommend that you negotiate Winnipeg, Manitoba being the place of jurisdiction, just so you are familiar with the laws, and if something were to arise, you would be well taken care of. Our KPI for this is to not go over the expansion costs of $250,000. We understand that there might be some difficulties, but being under that threshold is going to be important for keeping your costs down, which, like you mentioned, is very important for your business success. Now, more into the actual details of the contract. The structure, like I said, is a strategic partnership with the objective of growing market share and becoming the market leader in India. IP ownership, we've recommend that you have strict compensation for any violations. Obviously, your IP is your bread and butter. It is what makes you successful. A different tactic that you could use is mutually assured destruction. So basically, both companies would share their trade secrets. So basically, both have a high investment in the joint venture, and to ensure that both are going to be engaged in making this joint venture actually happen. Some more details about the actual contract that we recommend you have, for example, for management and control. We believe that your Kaizen method has been super successful and will be successful in the future. So I recommend that you bring this to the forefront and have this as part of your implementation into this new joint venture. Dispute resolutions, we recommend that you use a mediator. Litigation would not be successful in India, as if you go to the public courts, you would lose face with this partner. So having resolving any disputes internally is going to be paramount. And obviously an exit strategy is going to be important in case something goes wrong. And we recommend a 3-month termination notice for both parties if they are unhappy with the contract and with the partnership. Now, phase 2 is all about actually creating that partnership. So now that you have the contract in place, it's important to build those partnerships. So you're going to have virtual Zoom meetings with ColorSpace and AkzoNobel to vertically integrate and to have those executive meetings to make those important decisions. We recommend that you build those partnership with the ideals of collaboration, like I mentioned, open communication, trust, and loyalty, and always having that Kaizen approach of continuous improvements every day by everybody. By having this mutually shared upon mission is going to really be paramount for the success of this joint venture, which we've created. And then in terms of the actual what you would provide for AkzoNobel. So like I said, the Kaizen improvements are going to be important. You have international diversity, so you have the supply chains and logistics in place for also Akzo to expand potentially past India and past this joint venture, and technology. So you've always invested in technology. This is one of your biggest assets, like was mentioned earlier. And these 3 things combined, we are certain that your company is going to be successful in creating this partnership with AkzoNobel. Now, in terms of the phase 3, let's look towards the future. So obviously growing market share is going to be the most important. We recommend that you focus on wholesalers. We have identified 3 in particular, which we think will be successful for your company. And in terms of the promotion matrix, so obviously you're going to have the same product, but a new promotion. So for example, you must change the language which you use on your promotional products as you're entering a completely new market. And in terms of sourcing your energy, this is interesting, and actually one of the reasons why we chose India, as it has a very large capacity for renewable resources in the world. And we actually recommend that you start to appoint an energy source manager who's going to be in charge of looking to go away from non-renewable resources and actually going towards, for example, solar or energy, as solar or wind, as we have found these are very important in India. And we actually recommend that you invest 3.45% of profits into sourcing green energy, as this will diversify your overall customer share, as people will see your company being more green in terms of their energy sourcing, which is going to pay off dividends in the future.
So looking at the financial projections of the overall project, you're going to have an increase in the West Asia distribution in sales, and that overall increase is going to add on to ColorSpace's increase overall company sales of 2.3% in sales on average from the first year to the 5th year. But this is more of a conservative approach, looking at the aspects of current economic and COVID and any business restrictions that might be in place. We believe that this number will be much larger as you move forward and as vaccines start to be rolled out and those restrictions start to phase out through India. And looking at the risk and mitigation. So one of the first risks that we saw was your deal with Akzo Nobel doesn't go through. So we want to continue the course of action with other potential Indian customers, which we have done some research for and can present to you at a later date. We want that aspect, although that's the best way to mitigate that, we'll find new customers that you could possibly invest in. And then there's increased restrictions in India, as I mentioned earlier, on that conservative approach. So you want to continue that virtual expansion until you're safe to proceed, and that internal cultural conflict that comes up. You want to continue to adapt that Kaizen and communicate on that front as your overall strategic plan.
So, Ms. Krakowski, we know that today you came to us with the opportunity to figure out an international expansion strategy for your company and to find the best cultural and financial fit to do so. And we have done this through creating a joint venture with Akzo Nobel India Ltd. This company is actually a part of Deluxe Paints, which we know as a company here in Winnipeg. So being a globally known brand, we know that it's going to be a great thing for your company to move into in the future. And this plan is going to set your company up for future success, as there is a cultural and financial fit. And we know that working with us and being able to implement this plan is going to help Color Space be able to expand even more further internationally into that Middle Eastern area. If you do have any questions, we will open up the floor for that.
Thank you, competitors. I now open the floor for questions from the judges. Starting with Jen.
Hello, thank you very much. What I wanted to hone in on was how might you consider India's future workforce rank? It seems low compared to other countries.
Although India's workforce range might seem low compared to other countries, that labor force is there to provide you with strong and youth acquiring degrees who are willing to pursue new innovation and new skills that will help Color Space in the future. So that aspect is growing overall.
Next, we'll hear from Herb.
Good presentation, thank you. Just a quick question on our existing piece of equipment that you are recommending to sell, and the joint venture with contribution 50-50. Do you think we'll have any problem getting our joint venture company to put in 50%, or do you think this piece of equipment might help with the negotiations?
Yeah, absolutely. So in terms of selling the equipment, we think that it is paramount for the success of the joint ventures. We recommend that you sell it just to have that increased equity. However, if you did want to use it in terms of a negotiation aspect, we do recommend that you do that. We are aware that automation is important for your company, and we think that if you do not decide to sell it and actually implement it into the operations in India, that will definitely be also successful.
Next question will come from Randy.
Yes, very good presentation. Thank you. Did you explore in your planning the opportunity to buy out Akzo at some point if the venture goes very well to become the sole owner of the joint venture in the future?
Yes, we did actually explore that option. We know they are an extremely large company worldwide, not just in India. So with this partnership, we're hoping that you guys are going to be able to give each other something mutually. But in the end, if you do decide to buy out this company, it is very feasible. They have a lot of assets for you in India, customers in India and worldwide. So that would definitely be something to look into in the future.
Thank you.
We'll now hear from Hayden.
Thanks. With the challenges of the pandemic, in the presentation, you've outlined a lot of what you will do to fit things culturally. How will you adapt to a new, more virtual world of commercial sales as well in an international market?
Yeah, that's a great point, obviously. So with the pandemic, there is a big emphasis on virtual. So like I mentioned in the implementation phase two, for example, like the Zoom calls are going to be very important, and having those online sales. So having your online shop ready to go also in India for this new joint venture is going to be very important for, like you said, that commercial success in terms of selling to your customers. And we have identified those wholesalers for you. So obviously having things online and having those online shops is going to be very important for sure.
We do have time for about one more question. Judges, anything else to add? Hayden, once again.
Yep. With negotiating the old paint chip equipment into the Indian market, how do we manage expectations with that workforce and those partners to ensure that they're getting the best equipment, world class, and you know that they're moving in lockstep with HQ in Winnipeg, and how do you manage those expectations from the cultural workforce kind of perspective?
Yeah, so it's important to note that obviously right now during the pandemic, we cannot have you travel there to kind of check out the technology and see how up to date it is and where they are. But it is going to be important to just have that communication with AXO via Zoom and virtually, and be able to figure out what kind of technology they have, and potentially be able to manufacture or purchase some more technology here in Canada and send it there, or find a supplier in India to be able to supply them with the same technology that we have. And I know cultural context might make that a little difficult, language barriers, etc. But it is important to note that having that EDC rep being able to help you with those difference.
And that concludes the question and answer period. Thank you very much, competitors. This officially concludes the presentation, and we ask that competitors and observers now leave the Zoom call.